Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. This video is for educational and entertainment purposes only. I am not a financial advisor. I recommend highly that before buying any security, speak to a financial advisor and do your own due diligence. Hey everybody, Tim from Alpha Wolf Trading coming at you with what I would consider to be an exciting story. And I'm a car guy, so I love this story actually. And ECD, what's the extended name? It's ECD Automotive, right?
Automotive Design, yeah.
Okay, I've got the CEO, the founder, Scott Wallace, or co-founder, right?
Yeah.
Scott Wallace here to tell his story. And recently listed on the NASDAQ through a SPAC. And actually the gentleman that helped make that happen, Ben Piggott, is here as well. Scott Wallace, thank you, both of you guys, for coming in. Matt up there is IR. So I got a full crew here. But what I love this story. The first thing I want to make very clear, the company actually makes money.
Yeah, has done for a decade. I mean, compound annual growth rates of 26% for a decade. And we've been profitable, we've been cash flow positive. And the best part of that is, we can get into the history of how we got here, but it all began with 150K of liquid invested by myself. And last year we hit 22 million, and we've never taken an outside dime. We've never taken any capital until we went public. So we went from 150K to 22 million on our own. We bootstrapped it.
Which is a pretty amazing thing to say, right?
Yeah. It's funny, I didn't realize that until a lot of people have said it to me. I didn't realize it was amazing at the time.
No, that is definitely an amazing thing to say. So the SPAC, the way that you came at the market, I would have, and Ben, maybe you can be the one to answer this. The way they came to market with the SPAC, at one point SPACs were like the end thing, right? And recently that's changed a bit, right? But that isn't the only reason why this stock has gotten hammered. There's a whole lot of other reasons, but can you maybe just share why SPAC made sense?
It goes back to Scott's opening comment. I met the team down in Florida, and the capital efficiency and capital discipline of the team just blew me away. I hadn't seen that level of excellence on capital allocation from a company the size, frankly, ever in the course of my career. And I covered small caps at Fidelity for 15 years. I mean, I've seen thousands and thousands of great small cap growth companies over the course of my career, and the underlying unit economics and the capital discipline of this team, blew me away. And the whole thought process behind the SPAC was, if they can be that efficient, bootstrapped, just recycling their own internally generated cash flows, if we turbocharge this with outside capital, you could really get an acceleration of what they've already done. And that was kind of the thesis on the SPAC. And so we grinded for 18 months, getting it across the finish line. And it's just starting now. Scott's got a balance sheet that's got more cash on it than he's ever had, and we've got a big market that we're playing in. So that's been kind of the thesis at the core.
Ben, and who are you with?
I'm with E.F. Hutton. So that was the bank that sponsored the SPAC. I remain on the board with Scott, and yeah, that's been my role in this. But it's far more about Scott and his team. I'm trying to give them best practices on capital markets, and that's kind of how I got involved.
Okay, and I agree with you that it is about Scott and his team, but because of the cloud that the SPACs have been under, I wanted somebody that could clearly emphasize why that route, right? Instead of just going roadshow or
Yeah.
the whole thing. You know what I mean?
Yeah, no, I think it allowed the company to get public a lot faster than it otherwise could have. We were able to do it cheaper than it probably otherwise would have. And so those are kind of the two main reasons you would go through a SPAC process. And it also allowed the ownership group to retain still a vast majority of the company. So I think it accomplished those three things.
Okay. All right, Scott. So give us some background on how ECD became. How did ECD wind up happening?
Well, I'd be lying to you if I said it was meant to be here today. That'd be an outright lie. It was not. It wasn't the intention. Honestly, I was from private equity. I'd worked in Europe in private equity for many years. I'd done okay in it. I'd done well in it. My wife and I had 3 young kids, and we said, look, let's just slow life down a little. The deal was we'd come to the USA, invest in some small businesses that kind of ticked over themselves, but allowed us to be here under investment visas. My wife said to me, because I was a car guy in England, right? I was a big car guy in England. My wife said, well, if we do it, promise you'll never do anything with cars again. And I said, yeah, that's a deal. So then about a year into that deal, I met the Humble brothers, Tom and Elliot. I met them at a barbecue at my house. Tom arrived in a Defender. It started a conversation between 3 car guys that were all just sharing stories about cars we'd crashed, cars we wanted to own, cars we'd owned, cars we wanted to crash and own, all those kind of stories. And we drank a lot of beer. And we somehow convinced ourselves over the beer that there was an opportunity to take a British farm vehicle and turn it into a product for a luxury SUV audience in America. And we drank more beer and we talked it through, and we really convinced ourselves it was a good idea. And I said, I call it the safety net. I said to Tom and Elliot, Tom was in his early 20s, Elliot was in his very early 20s. And I said, you're not going to do anything with this. Elliot, you're at college. Tom, you've got a job at Porsche, VW, sales training. You've got too many safety nets. You're not going to take the risk. Well, lo and behold, I woke up the following morning to a text from Tom saying I've resigned from VW and Porsche. And Elliot sent me a text saying I've turned the car around. I'm not going back to college. And I said, well, I better do my bit and put some cash up. So it's a true story, not a word of a lie. So I then said, look, I've got a bit of an issue now. I've got these two really energetic guys, but they're not from private equity background. I'm used to being surrounded by C-suites and management teams that can take a role and drive the business forward. I'm good at scaling businesses. Private equity was in hospitality sector where we'd buy businesses with good underlying disciplines and cultures and behaviors and take bad management out and put bad management and reshape it. And I said, how do you do that with two pimple-faced kids? And so I took them to a gas station and I got a Post-it note and I said, look, we're going to write down some underlying principles and anchors of the business. So I don't want to overwhelm you with strategic slides. And nothing I hate more than word strategy, by the way. So I said, let's just write down some underlying principles for the business. So we sat at a gas station, had a coffee and a sandwich and said, right, what do we want to do? And first of all, we said, look, we've got to build something that excites us. I never wanted the passion to be taken from the business from being a public company or from the bean counters before a public company or CFOs coming in and the likes of Ben arriving. I wanted it to remain a very passionate company with a group of car guys at the core of it. Number one. Number two, automotive is not very good. I do not like the automotive industry. I think it is not client-based. I think it is just not a good journey friendly. I don't think people like buying a car. I don't think you like owning a car. So I said, if you look at it as a buyer, what's wrong with it? So we said, let's flip it. Put the consumer right in the middle of it. Let the consumer make the choices. Service them like they're in the Ritz-Carlton. A white glove approach to how you service a luxury car buyer. That was number two. Number three was create a culture where mechanics can be mechanics. Do not let them be fixers of vehicles. Let them be builders of future and innovations and automotive manufacturing in the US, but put them at the center of it, and all the management guys work for them. So that was the third thing. Fourth thing was we wanted to do one-of-one vehicles. So it was like never repeat it. IP belongs to the client by putting them at the center. It's one-of-one vehicle, build it once, and it's one-of-one. This excitement of when a luxury automotive brand says we're going to build one of 1,000, be the first, I just shake my head at that. I'm like, so you're now on one of 1,000 cars. So when you go to that event where you want to show your car, you stood next to 999 other people, you meant to feel special, right? And then the fifth thing and last thing was we wanted to do every aspect of it in-house. We didn't want to subcontract anything. We didn't want anybody touching our cars apart from our guys. And those were the 5 founding principles. They were the pillars of the business. To this day, as I look out my window into production line, that's what we stand by. But it was a very bold decision then. We had no mechanics, no facilities, no buildings. We were just at a gas station with a coffee. But that was it, that we were off, and off to the races we went and we signed our first lease. We then bolted on space, we bolted on people, and I figured out the science of the luxury custom automotive business, which is if you stay at the 12-month spot, that's how long it's going to take from the customer ordering to take to delivery. That's where everybody wants to be. The consumer will stay in that space, and you don't want to be one of those arrogant brands saying, well, you got to wait 5 years for the thing. But what it actually did is started to create our capital allocation mentality, which is if you're going to sell one, build one. If you're going to sell 2, build 2. Sell 3, build 3. So you keep in that space. But what it actually did is I figured out very quickly that you don't need fresh flowers. You don't need really glitzy premises. You don't need a chandelier in the entrance. You don't need a fish tank in the CEO's office. You needed to put capital to 2 places: skilled mechanics and parts to build the trucks. If you keep deploying capital in that way, you're always going to get that velocity of capital and build. You were contracted in, so you knew you could collect. So that allowed me to know what I could deploy. So we instantly, from day one, were generating free cash flow. I worked on the principle that if you were going to be able to scale the business and generate more free cash flow from not taking outside debt, you had to add value in the customization element of the business. So the business model is built on a base contract in 2024, not back in the day, of a 240,000 base contract. And we're making double-digit nets on that kind of thing. So what I said is, like, if we're going to scale, we've got to generate. But how do you scale but add value? Nothing pisses me off more than when you pay a premium on a car, but there's no value been added. Well, how did you enhance the product? So we had a rule as well saying that if you're going to put the price point up, you've got to add value. So when we added the choice where the consumer could make all the decisions, and in our latest configurator that's just went live on our website, went live last week, there are 2 million different variations of what we build. You can have 2 different combinations of how you put the thing together. And when I say customization, I'm not saying what color do you want the car, what leather do you want? I'm saying on the fuel gauge, what color do you want the needle? And do you want this tip of the needle in a special color, like your favorite shirt or something? Yep. And that's our level of customization. We had a customer that actually last year actually selected the herd of cattle in Italy to slaughter, to go to the tannery, to then go in the vehicle. And it's a $70,000 upgrade. So when I say customization in a luxury vehicle, I'm not talking the luxury brands like Ferrari and all those. What that allowed us to do as a business is put real added value in for the consumer because it's one of one, drive the margins equal to Ferrari and above Aston Martin and Porsche, but redeploy that capital into scaling the business. And that's what we did. You know, in 2020, we took a punt. We knew COVID had landed, right? The world's in shock. We're all stood there reeling. Now I'm in automotive, manufacturing, customization. I'm in a hellhole, right? So I'm like, what am I going to do? So there are two options. I go home or we go big. So we have a voting system. I promise you, any big decision, going public, we did this as well. Any big decision in ECD, there's a post-it on my desk, pack of post-its, 5 pens. We have a voting system. You put a Y or an N. That's it. There's no committee meeting. There'll never be a committee meeting. It'll never be focus groups. It's like we own it. We've got to make a decision. So we made the decision. We voted during COVID that we're going to go big. I split the management team. I knew supply chain, shipping fees, port problems, procurement of key parts was going to be a problem. Split the management team. 2 of you go back to the UK, set up UK logistics facilities so we don't depend on anybody else. We own our own shipping, sourcing, packaging, everything, quality control. Then the other 2 of us stayed here. We ran the day job scaling the business. And at that point, I think we're at like 15 million revenue. And on a nighttime second shift, we came over here and I found a concrete pad near Orlando, 20 miles from the airport. And I drove by that pad every night on my way home and I said, why is nobody building on the pad? Well, it's COVID, it's manufacturing. Nobody's got the balls to do it. So I then saw the steel. Now I said, I bet you the landlord's paid for that steel. And I bet you nobody's taken the lease. So we said, we'll take the lease. Because I knew when we came out of COVID, a couple of things were going to happen. I knew people were going to get bored. And while everybody said people are not going to buy cars, I said, I bet you they're going to buy lots of cars because they're bored and they got money, right? And they're not doing anything. And I said, and when we come out of that, how am I going to build more? So with $467,000 of our own capital, we built this building, 100,000 square foot. There's a picture of it in the deck that you'll see. 100,000 square foot allowed us to build 3 production lines one way. That allowed me in the future, when we came out of it, to have a 70 million revenue business if we filled all lines on one shift, 8-hour shift pattern. So we built the platform to scale ECD at that point, and we'd done it from our own capital. There it is. That slide right there with the big white building. There you go. So that's our facility. So when I talk about non-strategic committee, typical corporate mindsets, 2 British idiots over a beer built that, what you look at on that screen. Automotive manufacturers came in and told me you couldn't build 3 lines there and you couldn't have 6 bays so the trucks could move. And I stupidly brought them in because I thought I was a bit out of my depth. And I said, well, how did you figure that out? It's 300 foot long, the main production plant, and I know I can fit 6 trucks at 18 foot in. And they said, no, you need 20 foot space between the trucks. And I said, well, has anybody been to the line in our current building and measured that? And they went, no. I went, well, you're fired. You need to leave. Because business, I hate noise in business. It's like, just take all the noise out, and actually common sense is going to pull you through. And that building you'll look at is a manufacturing plant built on common sense. It was like, I need 6 trucks in the line and I need 3 lines of them. So that was it. And then we developed systems and processes. Again, we engineered them. We didn't buy software in. We created a system that on my phone, I can look at every truck in production. It tells me there's 641 steps of building it, but each one's different. So it's a little bit, could be 680, could be 520. Each truck moves every 4 days. And if you want to have a manufacturing mentality where you really empower the employees to run the plant, don't confuse them with Sigma, Black Belt, Kappa, Delta engineering philosophies. If you're looking at a hobbyist mechanic and say, move it every 4 days, but the guy before you gives you it 4 days after he's had it, and you give it to a guy and he has it for 4 days, 83 mechanics understand that simplicity. Yep. And then you turn it on its head and you say, I'm the least mechanical guy in the whole team of 100 now. I should never touch a car, but the mechanic should never have to touch the business. So the rule we wrote between us is you don't worry about the business and I don't worry about the cars. But that isn't just cultural BS. It's true culture. It's a genuine culture in this business, which is when I interview anybody at management level, the first thing I say to them is, you now work for 83 mechanics. And they go, yeah, I do work for them. I go, no, you really work for them. You're really going to work for those guys. And your job is to make everything as simple as possible, to give them what they need to build incredible vehicles without having to worry about all the grind of a normal business of this size. So a good example of that is we have a whiteboard where all the technicians plan their own week, no micromanaging from a production manager. They deploy their labor, they set their tasks, knowing they've got to do it in 4 days. And there's a simple white box I created, and it's called Parts Are Killing Me. And what that means, parts are killing me, is in a typical business of our size, the answer to every problem is, well, I sent somebody an email. And I go, what on earth are you expecting that email to do somebody's day? Wake them up, shake them down, change their behavior? It's never going to do anything. So we have a whiteboard, and if it gets on the parts are killing me, that a part is restricting the mechanic from building to quality or to time, a C-suite member has to see it without being asked and fix it without getting the technician involved. So it's a very powerful model of making sure that the mechanics who build such an incredible product have full control of building it. And that's how you create a culture. If you're really going to talk about empowering people, well, then really do it. And they're going to make mistakes, but they're going to really thrive on the outcome. And if you have a team of 83 people that are going to build something of such quality and such customization, who the hell am I to meddle? My job's just to go, this is the path we're on, and empower the guys to do it. Now, the question I get asked a lot is, how scalable is that? Highly scalable. It's highly scalable because it's cultural. It's not an operations manual. It's a behavioral, or I call it mortgaged autonomy. If you ask 100 people who wants more autonomy in their job, they'll all put their hand up. If you then say, keep your hand up, who wants to be accountable for it, they'll all put their hand down. We somehow created something special where you say, you can have the autonomy, but it's a bank loan. It's a bank loan. And if you don't pay the bank, we take the house back. So we have a very bizarre culture where the technicians recruit the technicians. It's a team mentality. It's a winning mindset. Share it between each other. Don't let what we call the sparrows in the building. We have eagles and we have sparrows. Eagles are going to soar. The sparrows are going to pull you down. I let the eagles in the team remove the sparrows. So they all interview each other. The job offers for mechanics are done by the mechanics to the mechanics, by the HR team, but the appointment is made by the mechanics. Who am I to decide if a brilliant body repair guy should join our team? It's not my decision. Let the guy who's receiving the paint to put on the car tell you if that guy should join the team. So I've kind of waffled on a bit, but what I'm trying to indicate is that
but listen, man, this is, in my view, man, is this a breath of fresh air. I mean, this is awesome, in my view, right? This is the way excellent companies are built, right? Empowerment of the entire team. And I would imagine the thing that's going through my head is they love working there.
Yeah. What do you think my retention rate is? The retention rate in automotive, I think it's a moving target. I think the retention rate currently in automotive is 45% to 48% for mechanics. Do you know what mine is? 95. 95% retention. Now, why is that important? Why is it important? Because I'm tired of businesses. I'm sick and tired of businesses talking about recruitment strategies. Why does any great business need a recruitment strategy? What you need is a retention strategy. What you need is not to lose good people. What you need is to invest in them, empower them, measure them. That's the mortgaged autonomy. Because actually people like being measured. My guys, I was out on Friday. I went up to Philadelphia, I did some investor calls at Pittsburgh. I went to Pittsburgh, did some investor calls on the road, did some interviews on Zoom, went to the hockey game at night. My guys knew I was at the building. Do you know what they did? They said that my phone rang, answered it on FaceTime. 83 mechanics stood there with a truck in front. They went, we invoiced it a day early to piss you off because you're at the building. So So I haven't got to be, it's not a traditional product. The buyer isn't traditional. How can I run it as a traditional CEO? It's not going to work.
No, it's not going to work. It's not going to work. But it is so one of the things that has always been big for me is that, and this just comes back to my own background in business, and no matter what title I held, I performed all the jobs, and if that meant cleaning the toilet, I cleaned the toilet, right? And I have always felt that the employees they're not employees. They should be your partners, right? Yeah, right. So if everybody is on the same page with that respect, the performance that you get out of everyone is amazing. And I was in a position where I never had to worry about the competition. I let the competition worry about me.
Yeah. And I'm not egotistic. That's where E.C.D is. We were laughed at over that idea of a beer. Our competitors, the industry laughed at us, and I had to keep laughing. It doesn't bother me. And it's kind of what you're saying about the SPAC. People are looking at it as a SPAC, and I'm like, well, I am. It's like I went up a really big ladder, and I feel like I've gone to the bottom of it. But I'm like, I'll figure it out. We'll figure out how to get the message out there. We know the right messages. We know what we've got to do. I'm going to be measured, right? So deliver the results. And to deliver results, all I've got to do? Sell trucks and build trucks. It's no different. It's that simple. At first, I was a bit consumed by the knowledge being public, but actually, it's just the same results. Now, to that point, and everybody asks me that, there's an interesting model we have here with the C-suite. I inherited my C-suite. I couldn't recruit them. It was a family. Yep, the Humble brothers. So for a decade, we run a thing called, for the C-suite, an MFD. Now, I'm going to be a little crude here, so I'll apologize. What does MFD mean? It's a monthly budget pack for the C-suite that means must fucking do. And for a decade, 12 times a year, you get an MFD pack as a C-suite and say, you must just do this. You must just do this. You must just do this. And then we meet every Thursday and we'll go through that. It's sitting on my board right now behind me here. And I've done it for a decade. The beauty of that is nothing runs away from you. You're catching the problem in real time as it's happening and it's starting to go wrong. You're not waiting for a quarter. You're sitting there going, 5 days have passed. How are you to MFD? And the 4-day rule comes in. Tom's in charge of all the clients. Tom's the CXO. So Tom, have you sold a truck in the last 4 days? Have we built a truck in the last 4 days? Have we communicated to a client in the last 4 days? Everything's 4 days in ECD. But that MFD mindset, you take away the corporate noise and the strategy planning and committees who never make a decision. And that's why there's never a statute to a committee. You got a ton of empowered people that are going, so what you asked me to do, Scott, 12 times this year is just that. I did. I took all the noise away, and you've just got to do that. And that's why, in everything I've just told you about the culture and the measurements and the mindset and removing noise, I think we delivered 26% compound annual growth rate for a decade from $150,000 to 22 million revenue because it was cultural. We acted poor on our cash. We still act poor on our cash. Ben said we got money in the balance sheet. The minute got that balance sheet money, the minute it landed the balance sheet, I was so fearful a culture that I told to act poor was going to act rich. And I started hearing all these things. Oh, we'll buy this, we'll buy that. Do you know what I did? I put an internal loan application process in. I said, you want to borrow $1,000 as manager? Fill in the loan application. You want to borrow $5,000 or more as a C-suite member? Put a loan application in. You fill in the loan application, you work out your own ROI in the best language they could. You present it to the CFO. He says it's viable. Then it comes to me. So I've got more capital, but I'm more disciplined than I ever was with it.
I love this. I love this interview. This is much better than I even thought it was going to be. So, how long you been in business? How long it's been? How many years now?
We've been in this 10 years.
10 years. Okay.
I joined in my 150,000 liquid landed in June 2014.
I mean, this is awesome, man. I could talk to you for probably days. I really could talk to you for days.
There's something better than talking about. I promise you, if you came and saw what's inside that those white four walls, you'd be blown away because I'm telling you it, and I don't know if you believe me. I promise you, if you come and see it, I came into work a few years ago, and on my desk was a pile of brake calipers on my desk, covered in oil. There was a Post-it note that said on them, "These are shit. Never use them again." My mechanics put it on the CEO's desk. And here's something really, and Ben made me do it. Until I met Ben, no manager in my business had a title. They never had a business card and they never had a title. I don't like the fact I've got a title now. I understand why I've got to have it. I know why I've got to have it. But until I met Ben, the business never had titles.
This is so cool. Oh, I love this. I absolutely love this. There are so many businesses that can learn from. I mean, you could be a self-help book like immediately. This is. I'm dead serious, man. Let's talk about the nuts and bolts of the business as it stands today. How many different vehicles are you currently building, like models?
Okay, so if you're familiar with the Jaguar Land Rover product range, what we do is we take the 25-year-old versions of their model range. We currently do it in the Defender. The Defender has a Defender 90, which is a short wheelbase, a 110, a 130, and a couple of others around it. But just let's call it the Defender. British farm vehicle at its best, in its day. Then we do the Range Rover Classic, which was always a car of royalty in the UK and got a good perception here, a good following here. We added in last year the Jaguar E-Type. And then we are about to add 2 new models this year. And under our M&A strategy, we are looking at something completely different as well. Because I've got 3 production lines that can build 60, and actually only 2 production lines are at capacity right now. We're sold out until early 2025.
Okay. So how many vehicles are you pumping out? And then what does your backlog look like today?
A year backlog, but we will build 98 vehicles this year.
Okay.
Organically, that's just organically. We don't add any new product, just existing product.
And I mean, you gave the example of the leather, how customized you want your vehicle. I mean, these vehicles are going for, they're not cheap, right? I mean, they're not inexpensive vehicles.
You can get in one for $240,000, but that's not where most of them stop. They're on average 338,000 as of this morning.
Okay. I think this is such an interesting, because you're not just, it's not just combustion engine vehicles. You'll electrify the vehicle as well, right?
I have no opinion on that. My job is to give the client as many choices as they want. People ask me that all the time. Are you an EV car business? I'm not anything. I'm a consumer product that the consumer has a menu choice from.
Right. If the guy says, I want hydrogen, I want a hydrogen car, you guys are going to figure out a way to do a hydrogen car.
Let me talk to my engineers. I mean, yeah, I mean, we've had some ridiculous requests, like killing a cow in Italy.
And I would imagine the people that are coming at you with this, these guys are probably pretty well to do, huh?
You would recognize every name on my database. You'd recognize every name on it.
I'm sure. There is no doubt in my mind about that. But then I ask myself, well, how big can this thing get, right? I mean, how many of those guys are there, right?
Yeah, I love that.
A lot.
I know.
I love that question.
I love that. Throwing you a softball, man.
I love that question. I'll tell you why I love that question. So think about it. Right now, I appeal to the 1% of the 1%. Yeah. So the super wealthy and that super wealthy who want, then you've got who wants cars are super wealthy. Do you want a jet? Do you want a custom yacht? I don't know. But then it's who's the car people in that, and then it's who's the British classic car people in that, and then who's a Land Rover product within that, right? So it's the 1%, the 1%. But then just broaden it. I'm all US at the moment. Our cars have never been out in public. They're all marketed via press relationships and Google optimization. So I've never taken the car out there. So now go the 1% worldwide, UAE, Europe, which we've just started getting into because of the brand presence. And then say, what if it wasn't British? What if it wasn't a British car that you're storing? So now you're not at 1% or 1% or 1%. You're at 1% of 50% of 25%. and then say, well, let's just start putting the car, like I did when we did the business. Just put the car at the center of it, right? And the guy that owns that car, the company, the family, the lady, whoever owns the car, yeah. What they actually want is the LVMH model of luxury. What they want is, I bought a classic car. We've made it a daily reliable, daily runner. It's not like a classic car. All the modern functions are in their reliability. However, it's going to get a flat tire. Yeah. So they're like, I don't want to deal with that. Yep. Then it needs insuring. Then it needs financing. Then it needs reselling. Then it needs storing. Then it needs new parts to it. The $15 billion sector I started with is sitting right there in that ecosystem. I am a tiny part of the ecosystem. And the reason we went public, whether it's SPAC or not SPAC, what I saw was, I'm looking at this business saying, Scott, you're going to max out. It's like, how are we going to take this bigger? Because when I started putting the industry together and we did a lot of research on it, I challenge you to do any research on the classic car market at that $15 billion revenue point and find a dominant player. Find me one dominant player. There isn't one. And the reason I returned Ben's call was I like the fact he came and understood the business, and he wasn't just like in it for the greed and like, you know, we get it. We get we're a public company and we got to get returns in the share price. But what you've got to do to get that is a brilliant product and a brilliant culture. And we've got that. And it's now kind of like, how do we make the markets aware of that ecosystem? Because the opportunity is the fact that nobody's doing it. So we've got to get a lot of guys in the sandbox and start playing nice. We got to find manufacturers, finance services, parts, vendors and supply chain, channels to market, auction houses. Think about the auction business. But what you really want is to find a system where whoever owns that car, whether it's a Ferrari Enzo or a DB5, whatever it is, Aston Martin Classics, there's an answer to it all. And the industry doesn't have that right now. You've got to go and find somebody for insurance, somebody to resell it, somebody to market it, somebody to buy a part for it. Put it under one parasol brand, E.C.D. Automotive Design. We'll figure the rest out for you. It's just over-servicing a consumer market that needs support.
I absolutely love this. I absolutely love. There's nothing I don't like about this story right now. How many shares do you guys have fully diluted outstanding?
Dan, you want to run through the cap table?
Yeah, we've got about 33.5 million shares outstanding. Scott and the 4 founders, they've retained 24 of the 33.5 million. So they still own, 72% of the company.
Okay. So 33.5 million shares, like anything under 100 million, I think I consider that thin, right? I mean, that's not, you don't have a bloated share count there at all. You're cash flow positive, right?
Yep.
My dog wants to be part of this meeting, guys. and
I was wondering if that was Scott's dog or your dog.
Well, my dog's normally here every day. Not here today. I came in a different car.
She really wants to be involved, so I think she's excited too. That's the thing. She's a car dog. So
we have built custom dog ramps in the back. We generally have, honestly. We have built an air conditioning for dogs. We built a ramp that one's extended out electrically.
Yeah. I mean, she's normally not this vocal, but she's being very, very vocal right now. So I think that the biggest thing with you right now is look, I think anybody that's in that is a car person and B a student of business and the markets and the whole thing would really want to hear your story and meet you, right? I think that the biggest thing with you is get you in front of people, right? Yeah. As many as possible. Because I think you have a fantastic approach to building the business. I would imagine, does everyone in the organization, they have options to get stock?
We're doing that in Q2. We've got it's all ready to go. We just filed the S1 and then we got some other bits to do. But yeah, it's in fact, we got a board next week. We're just going to get that approved through. So yeah, absolutely. But we did a phantom stocks scheme before that. And actually, we just paid out in it last week. So some very happy guys. In 2017, we started that scheme. So yeah, they've got to benefit from it.
I mean, that to me is another thing, another component of, these guys, and I'm talking, for me, it would be down to the person that cleans the bathrooms, right? I mean,
Everybody does it.
gets up.
Everybody's in it. After 1 year, 1 year of employment, you get access to the program.
Yeah, and that's the kind of thing that I love to see. It's not just the C-suite that is benefit, right? It's the entire company. It's everybody. And that builds a team like nothing else in my head.
Every year in this business, you get a re-signing bonus like you would an NFL player. Every employee, if you're a grade A or A plus, you get a re-signing bonus.
Yeah.
When I say it's run like a sports team, it's run like a sports team. We even name them: offense, defense, back office, and locker room.
This is like the coolest story, man. I swear to God. So let's talk about the vision here. It's a very fragmented. There is no dominant player.
Yep.
So what's the strategy to, go out to the marketplace and try to start, I guess, pulling some of these guys in and making them part of the core to become the dominant player, right?
I mean, to me, that's simple. First, number one, don't have an ego, right? It's like, because we got here and we were first over the line doesn't mean to all those mom and pops who have worked their tails off, who are still, you got mechanics doing what we do with Mustangs and, AC Cobras, and they're at like 2 million because they can't figure out to do what, like, I'm not the mechanic, but what I'm good at was scaling, but they haven't got a guy like me to help them scale. Well, let's not approach it like we're going to take over the world. Let's approach it. We're going to put us all in bed together and play nice. Let's find those roll-ups. There's obvious roll-ups that we can just bring into the manufacturing side. The M&A side is where we've got to be a little bit more, I hate the word saying I'm going to kick this off, strategic. But it's like, that's where we've got to say, well, where are the ecosystem bolt-ons named? And what makes sense at the right time to do that? So I'm not worried about the roll-up side, the manufacturing side. I mean, bringing in other brands. And you just take the McDonald's model, right? You kind of go, look, you're doing it, you build a great product, but you weren't able to scale it and you're turning clients away. So let me take our process and systems and put them in your business. Let's transplant them right in there so you can do it with other marks and other classics. So the manufacturing side is pretty straightforward, classic roll-up, yeah? But then the other bits...
There's tons of them out there, Tim.
Yeah,
there's tons of them out there.
Oh, I mean, I'm in my head. I mean, I know this, right? I mean, how many do I have here in Las Vegas where they have the, classic car show every year, right? I mean, yeah, there's just a boatload of them, right? And there isn't. I can't think of one dominant player.
I think the one after that is lifestyle tip. I think after that, it's like, how would you bring all the, like you're a classic example. Where do you bring all these gearheads together where we're not seen as geeks and a bit quirky? We're seen as like a powerful fan base that is like, wants to do something. So whether that's, we've always said from day one, ECD will never be so arrogant that a fan, and we have 500,000 social media followers. Our trucks get 1 million views and it just blows my mind. I'm 20 miles from Disney. Every day, families arrive saying, we're going to Disney this afternoon. We follow you guys from Italy. We want to do a tour of the factory. They get the same test drive, the same tour that a buyer would. So let's not be arrogant about that. So let's bring the car community together and accept that, I was thrown out of every Ferrari dealership at 15 years old. Get out, you can't afford it. That'll never happen in my business. I want to put us in a system where that lifestyle of classic becomes a revenue stream where you can see it, whether you just want to be a member at $150 a month, but be part of it, or you can store your $4 million car there and be a part of it. But you can come and be the modern day, what we used to call in England, the pub, where the community comes together for classic car, whether it's an event, storage, a cup of coffee, a glass of wine, do some work, have a meeting. And then what I've actually got there selfishly is a platform of billboards in pocket locations, Chicago, Los Angeles, New York, West Palm, where we've got a billboard to promote the brand and resell, get that reselling velocity going of classic cars. And why do I care if I'm reselling a classic Land Rover or whether I'm reselling an Enzo? Because it's 7.5% consignment either way, right? But while I'm doing it, I'm actually saying we're not pompous. We're embracing the car world and saying, just come and enjoy cars, man. Just come and be part of it. But what we're actually doing is creating the first part of the ecosystem.
Yeah.
So that's where we need to think it through.
I totally get this whole vision, right? I mean, I absolutely get this whole vision. I mean, I'm a Harley guy. I'm a car guy. I'm a Harley guy, right? I mean,
Wheels.
so if you think about it, right, you're talking about Harley Davidson, right? I mean, look at maybe not so much anymore, but for a long time, Harley Davidson, I mean, that was the in thing, right? That was the lifestyle brand, right? I mean, and you went out on runs, and I mean, it was a family, right? It was just a place to go and be with people like yourself, and just, you know, be wowed by custom bikes, and it was just a good time. Just go out and have fun and enjoy your bike, right?
Yeah, and feel comfortable whether you can afford it, whether you can't. It's got to be fully immersive for and accessible to everybody, because that's what's going to make it work. I think we're missing something in cars right now. I get it. I understand Tesla, or you know, autonomous driving and all the bits. Who's really driving these days? Who's really frigging driving anything? You know, I came to work this morning in my car. I'm not doing anything. It's got 702 brake horsepower, but I haven't got to drive it to do it, because it'll do it all for me. So I get lots of kind of younger buyers that are like early 30s, and they're like, what is a manual like? What does it feel like to drive a manual car? Let me show you. Put you in an LS3 manual Series 2, 2A, and smash it around the kind of fields around here. And they go, Jesus Christ, I've just had a workout. I'm like, no, you didn't. You just drove. Now you're driving.
I mean, you know, I'm sitting here I just said the car show's here every year in Vegas, right? I could see you having your own car show, right? Your own. You could have a convention here in Vegas, right? I mean, this is my wheelhouse. You want to go off the charts, man? I'll go off the charts with you. I'll go on this ride, because it's fun. It's exciting. It's not the same boring shit all the time, right? This is exciting stuff. I think we need more of this kind of stuff, right?
We were asked 3 times for a TV show. 3 times we were asked to do a TV show. So they did the sizzle reels, and they all came back to me and said, we want editorial control. I went, you got to be shitting me. There is no way you are going to have editorial control of me. One, because you're not going to be able to. And secondly, I don't want this fugazi of like what this business is. This is like grind and ground and fights and, you know, guys going at it. It's like, I don't want to kill that. I mean, somehow we've figured out how we can be a luxury brand. Our clients get it. Our clients come here and go, please don't ever change. There was once an issue where we got live cams in the shop. I think if you're getting a $300,000 product, you should have transparency of that. Nothing pisses me off more when you're like, oh, you can't see what we do. And, you know, everybody's like, oh, what about your IP? I'm like, well, you can go to IKEA and get a build catalog. I don't think you know how to build it. Share as much IP as you want. They haven't got a culture, right? So this guy, the sound was on. And I think it was something like our HR manager or our client services manager came running to me and went, you got to turn the cameras off. We're hearing profanity on the YouTube channel. The client rang me, and they're like, don't you dare turn that off. We live for the profanity of you Brits cursing on the channel. So somehow we figured out that billionaires kind of enjoy just the rawness and the honesty of what we are.
Yeah, no, look, I get it. I can see this resonating in so many ways. And then as I'm sitting here talking to you, I am thinking of all so look, my thing is, how did I get here? I got here because I think Wall Street is so broken. It's not even funny. I set out to actually try and make retail investors better investors, smarter investors. And it's been a long journey, and I'm stubborn, and I just realized that retail investors really don't want to be smarter investors. They just want to be told when to buy and when to sell. That's it. And that's really not what I'm all about. I'm all about trying to teach people how to fish, you know, for themselves, because at some point I'm going to croak, and I'm not going to be around to tell you that this one looks good, right? So you should learn how to do that yourself. So as I look at what you're doing, so one of the things that I do is when I get involved with the company as an investor, I'm part owner. That's the way I view it. And I, as a part owner, am going to try and help the company grow in every way possible, right? If that means bringing them customers, potential customers, if that means, introducing them to another CEO at another company that maybe there could be some synergistic opportunities there, right? Make the introduction at a high level. So that's really, it's not just the investment. I'm a long-term investor. I'm not a trader. I'm gonna ride in the car with you. We're gonna go I'm looking for a 10 bagger, 100 bagger. I'm not looking for 20-cent scalp, right? So
Yeah.
that's who I am. And in this day and age where the average person's attention span is like 1.5 seconds, the dynamics of investing world it's changed an awful lot, and trying to get people to understand that investing is that's where the real home runs are. It's not trying to time the market, right? It's finding good quality companies early when nobody else is paying attention to them, and getting in and going for the ride for the long haul, right? I mean, I could see this business. So you said that what's the overall TAM? The overall TAM for the industry is 15 billion. Is that what you said?
15 billion. Yeah, I mean, I think resale of classic cars is about 3 billion.
Okay. I honestly could see that. To me, that was actually a little shocking. To me, that seems like a low number. I don't know why I'm thinking that, but
yeah, we've been back and forth on that a few times. It's hard. There's there's not a lot of data out there for the same reason I'm saying it's not been done.
Yeah, it's hard to put it on together.
Right. So maybe the TAM isn't even figure outable right now. Right. But I think that the opportunity is tremendous. The lifestyle brand, the whole thing, I get it, man. And and I love the leadership. So for me, the most important thing, you can have a great product, you can have a great service. If you don't have great leadership, I think the odds are stacked against you. Right. So leadership, you got a check mark, right? That's check. Then the strategy, I think, is brilliant. Check mark. That's check. Your financial stability, check mark. That's a check. So I'm not, just so you know, I'm a fundamental guy. I'm a story guy. I always have been. And I could never understand how anybody could determine anything from technicals, right? But then I took a course 15 years ago, and now the first thing I look at is technicals. It's weird how that shit works, but I try to combine the two of them, right? If you can find an interesting technical setup, and then you have an incredible fundamental story, and you can align those two, then your odds of having a home run, I think, increase dramatically, right? So as I'm looking at the chart, and there's not a lot of history there, but this is what I look at. I look at the fact that we just went through a pandemic, which I'm pretty sure has never happened before. We went through the worst supply chain issues in history. And now we've gone through the fastest interest rate hike cycle in history. I would call that a fairly challenging business environment, right? And if you were able to not just survive, but actually thrive and grow your business in that environment, what are you going to do when things start to normalize? Right? That's always, unless this is the end of the world. I mean, I know everybody thinks a recession is coming and all that bullshit, but I think we've already been in a recession, and we're probably closer to the end. And I think we got a lot of people that are sitting on the sidelines flat-footed, and they're going to get caught flat-footed because I think the bounce isn't that far off. But I could be all wet. I could be wrong. It's happened before. My crystal ball is a little foggy. But I think the opportunity when you can find, this is the opportunity right now. I've waited 14 years for this time period right now, because this is when you find amazing companies at amazing values, right? And you just don't need one or two to really go on a fun ride. And I think there's a lot of them out there right now. So I'm extremely excited about this time. Not too many people are. Everybody looks at me like I'm kind of a whack job, but that's okay. I think there are some companies that are going to change the world out there that nobody knows about, right? Nobody's paying attention to. And that's when you make real wealth, is when you get on those things early. So I would consider, is that the one thing that this doesn't fall into category for me is there's wants and there's needs, right? I'm all about finding the things that are needed and, you know, things that maybe save lives or, you know, are going to change an industry. Those things are needs. It's not a matter of if, it's when. Does it get accepted, right, or adopted? This is a luxury thing, right? So it's not necessarily a need, but I think you can certainly create the want, right? And you already have. I mean, it's proven. This is a proven model. So what I want to do now is just kind of take a look at where the stock is. What's the total market cap on the company right now?
Market cap, $32 million. And this is really where you get all the ingredients for what you're talking about, Tim, for a multi bagger, in that there's analogs out there, principally, you know, Ferrari, who's executed phenomenally well, is obviously a household name. You know, Ferrari sells for 8 times sales, but the same things that are driving that business are what's driving ECD. It's record visibility on backlog, customization that's driving a powerful margin tailwind. That's out there for the mega cap big institutions to own. ECD exists and is experiencing all those same fundamentals on a micro cap space, and you're buying it for one-time sales. So you have something out there where that's crushing it. ECD is seeing all the same things: 8 times sales, one-time sales. That was a lot of kind of my thought process early on. How do you have the Ferrari analog for the retail investor or the small cap growth PM to get both? You know, you get paid in stocks 2 ways. You get earnings growth and you get multiple expansion. In this setup right now, you can have dramatic multiple expansion and you have a long runway of earnings growth, and that's how you get multi baggers over time, at least from what I've experienced over the course of my career.
And I agree with you 100%, right? So, and I mean, this has got so many elements of this could just be a rocket ship at some point. I mean, this could be so fun. And look, I don't tell anybody what to buy or what to sell. That's not what I do. What I do is I only interview companies that I think are going to make their shareholders money. That's the only companies I'll ever do, and I'm not paid to do this. I'm doing this for free, right? I do it again to help the company that I think has the right product, service, and leadership to ultimately make their shareholders money. Does that mean it's going to happen tomorrow? No. I can't tell you exactly when it's going to happen. What I can tell you is this is a extremely compelling story. It's got a strong leadership that understands the capital markets, which is critical. And it is sitting at, so you've been basically going sideways. When did you guys actually do list on the stack? When was that?
13th of December.
December 13th.
Okay. So, you know, right now, nobody's in control of the stock is how I see it. It's just kind of going sideways. It's building a base, right? I think you're a very early stage in terms of getting your name out there and recognized, right? Would you agree with that, Ben?
Yeah, 100%. Yep.
Okay. So I think as people get to know Scott and the story, I think you're gonna draw a lot of interest. That's my personal opinion. No need to raise capital. We've already discussed that, right? So you're strong. You're in a solid position. If by chance you were to come up with a potential acquisition target, would you, what about in that scenario? You might have to raise capital, right?
Stock first.
We're mindful of the share price, and it's got to make sense on a per share basis and be accretive. There are ample number of things out there that are bolt-ons that would add value on a per share basis day one. If that math doesn't pencil, we'd rather buy back stock, or there's a very strong, and Scott will reiterate this, make versus buy decision. If we can go buy a really good muscle car business out there and get into that industry, and we can do it where it makes sense economically, we'll do it. If there's nothing out there where the numbers don't pencil, we can start that line organically and get into those markets on our own. So it goes back to everything that Scott said. There's a strong discipline, make versus buy, and thinking about return on invested capital to, down to the decimal point on every decision that's being made in the organization.
Right. And that's why I say understanding of capital markets is critical, right? I mean, you guys know when to say no.
Oh yeah,
Mm-hmm.
I mean we're
Yeah.
the process, the taking the noise. I mean M&A. Oh my God, it blew my mind. I mean I've done it in private equity, but I've kind of been in a different arena here. And I said to Benny that we got to just take the noise out and turn it into some very disciplined kind of decision process. And we put some metric tables together that are really simple. Just a scoring criteria. We put 3 businesses in the pot, and emotionally it was fascinating. We scored one of those businesses number 1, and one was 3. We took the emotion out, and I said, just stop the noise. Like, everybody's got an opinion, just put it in some metrics. And they flip-flopped. 3 went to 1 and 1 went to 3. And it's like, right, now the data's telling something. It wasn't overcomplicated data, it was just smart data, like common sense stuff.
I love
like
it.
really common sense stuff. And then
Right.
we're sitting there, and unfortunately we have to give the news back to people. You've gone from 1 to 3, and it's like, and then all the emotion kicks back in. But what if? I don't care about the what if. The data's telling me we're making a smart decision. The decision we're making. We did all the emotion stuff. We have an M&A group of 4. Everybody put their bit in. Then I process stuff. Then I take away the noise, and then I go, right, this is what we're seeing, and we scored it. And again, it's like we've moved from being a private company to a public company. What really has to change? I always had to give shareholder value, whether I was putting food on the table for 80 families, or whether I'm putting it in shareholder return. That the underlying discipline of the business should not change. And I said that to Ben at the beginning, don't let anybody change me, because I think our disciplines are really good. I think we do I think we did publicly, I think we did privately what shareholders want us to do.
Right.
Watch the dimes, but don't hold on to them if there's a smart way of getting a great return. And be really self-measured. You've really got to be disciplined. And I think that's what we do throughout the business. A team of 100 are doing it, not one bean counter. 100 of us are doing it every day.
Mm-hmm.
All right, this is I mean, I think this is going to give a lot of people a lot to chew on. I think if there's anything that you guys can think of that I haven't touched on, or you really want to emphasize, this would be a good time to maybe do that.
One of the things I always get challenged on is, I don't know why everybody asks it, but it's cost of acquisition. Everybody says, well, you're in a luxury marketplace, you can have a database of the well-known, but it's going to cost you a lot of money to do that. And we never did. What I figured out very quickly is we were broke in the early days, right? It didn't take much for me to figure it out. I had 150K liquid, and I got a scale, a 12-month backlog. So I couldn't put money into exclusive luxury kind of marketing. And my background in private equity was marketing and sales. So I kind of said, well, what would we do? So I didn't want to have a high cost of acquisition. And that was another discipline we put in. So one of the questions we get asked is the marketing budget must be immense. And it isn't. I figured out 2 things very quickly, like get the press to work for us efficiently by genuinely having content and stories they want to tell, and appreciate, respect, and apply the rules of Google. So we hijacked a Mercedes AMG event in Malibu, California. Mercedes paid the dollars. They invited the automotive world and said, we're going to be launching the UMG series. So I sent a tweet out and said 3 British idiots are going to be in a mountain in California driving an LS3 powered Corvette powered Defender through the mountains. And it cost me a tweet. I mean, it didn't cost me anything. It cost me time. And they all just came up the mountain. They all just came up the mountain, all the biggest automotive guys. And I'm truly in the debt to those guys. To this day, twice a year, we hold a press familiarization event at ECD where we invite them all back. And they get to see the new ideas, they get to tour the factory, they get to meet the guys, they get to test drive all the new toys. And they've just done an incredible job for us. They've just shared the story with genuine passion, like as we have, because they love what we do. And we didn't do it on, nothing pisses me off more than a $5 million R&D budget. You know, we bought an EV, our first EV, guess how many days you got to put it in the car? 4. And
That's a consistent theme, right? 4.
The guy's going to me. The guy's in the line and going, "You lost your shit this time. We can put an LS3 Corvette engine in, but now you're asking to put an EV in for the first time." I went, "Well, you better figure it out because you're all car guys and you're hobbyists, and this is what you tell me you love doing." Do you know how many days they did it in? 4. Because the minute you say R&D and you say, "Let's create R&D space, let's create R&D people, let's create R&D budget," you know what it'll get? No return. They'll just piss away money. And it's like, I've got 83 automotive misfit tinkerers that tell me they just want to play. Well, go play, but do it in 4 days. The whole ethos of the business is like the whole cost of acquisition. It astounds me when I see billboards with the latest piece of jewelry on and placed in this magazine. If you've got a true luxury 101 product.
You talked about Tesla. I have to give the guy props. I mean, think about the fact I've never seen a Tesla commercial.
Nope.
I've never seen, right? He built a brand off of him. I mean, quality and hard work. And I think he's a brilliant man. Do I think he's, I actually, you know, look, Scott, you and I are gonna get to know each other extremely well because you are what I would say. We need more of it. We need more of it across the board, and then we need a dramatic change in Wall Street as well, right? I mean, there are some really broken things out there right now that need fixing in a big way. But I am so excited about this, guys, that I mean, I can't wait to do our next interview. So let me ask you this: when do you report earnings? When's the next earnings report?
March.
What is it?
End March.
In March? Okay. What do you anticipate if you were to say there are any catalysts on the potential catalysts on the horizon? What would that be?
We've already given guidance for 33 million top line, 38% gross margins, which is it's about 300 basis points up year over year. That's really being driven by those upgrades, the woman slaughter and the cows, and just doing more and more exotic things to the vehicle. And so I think delivering on those metrics, seeing the steady progress on gross margin expansion and working through to that $33 million top line is what we should be held accountable to. And then, you know, listen for, you know, directionally the, bookings continuing to trend in the right direction. And I go back to Ferrari. They reported yesterday. If you read that transcript and understand what's driving that business, it sounds exactly like everything that's driving this business right now.
Okay, and then there's also the possibility of a merger or acquisition, and then there's always the possibility of some new car models, right? I mean,
new car models are going to happen. I mean, it will be launched in March 21st to the automotive press and luxury and lifestyle press. So March 21st is the event for that. The car is built. It's just a kind of roadshow we did with some clients on the East Coast and West Coast, and we've taken it around, and client base that have been with us for a long time have seen it, so we could measure response. So that car is built. It was finished in end of December. So it's doing a little roadshow now. We're getting some feedback. We're tweaking we're going to commit to building 18 of those this year. So we're going to launch that end of Q1 to the press, and it's funky. I mean, it's just it's cooler than we've probably done. We let the automotive misfits dictate what we should do with it. I call it low-level flying because we've done something funky to the car that's never been done. So yeah, that's a no-brainer. That's locked in and done. I mean, there's nothing I can do to stop that roller coaster. It's left the station now.
When the SPAC came out, where were your price? Right around 10 or so? Is that where you were at when you first hit?
Yeah,
It was
yeah.
10, and then it immediately, reset down to where we are in the course of about 10 days. So yeah, we came out at 10 and, did what most SPACs have done, unfortunately. But like I said, from where we are now, one-time sales is fully booked, and we're looking into early 2025 now. The stock is set up exceptionally well, in my opinion, and buying something that's growing organically, that's profitable, that's expanding margins, that's selling for one-time sales. That's the anatomy of multi-baggers. That's where you get that multiple expansion.
What's the average
Like
daily volume on this?
230,000 shares per day. So
Okay,
call it $250,000.
That's actually not, that's better than I actually thought it would be, right? So the way I view it is technically this thing is just building a base right at that $1 mark, which isn't, the round numbers, the NASDAQ listing, right? You got to stay above the buck. You haven't gotten a notification yet, have you?
Nope.
No. All right. So guys, even if you go below the buck, you got 180 days and then you got another 180 days. So I think you guys are going to have enough ammunition to show that what you say you're going to do, right? And I think it's an exciting business. Do you guys come out for like SEMA or anything like that when it's here in Vegas?
We were at SEMA last year. I mean, the benefit, the power of the brand is exactly that. We don't have to take out expensive floor space at SEMA. We get invited to it by lots of vendors. So I think we had 3 cars out this year. So lots of the vendors say, "Can you bring one of your vehicles?" I mean, again, to that point, am I going to sell cars at SEMA? Probably not. Do I get millions of car guys excited by saying, "Look what you can do with a classic E-Type Jaguar and electrify it"? Hell yeah. Does that give me a buzz? Hell, it gives me a buzz. I mean, I'm living in a world now where share price is important and we're being a public company, but we have multiple responsibilities in automotive. We have multiple responsibilities. And if we can just go to SEMA and excite a few car guys and automotive misfits, and hell, that's part of my job, because they're going to tell the story for us. We put a Corvette engine in a Land Rover Defender. I should have got slaughtered. The Defender world should have destroyed me. They should have said, "That is blasphemy. You don't touch that thing, and you're playing with the suspension, and it's got more R&D, and it was a military vehicle." And they didn't. I said to them, "Look, you might like it, you might hate it, but let me show you. Just come on and we started with 100 Instagram followers, and then we started with 1,000 Instagram followers, and slowly they're like, "Yeah, we quite like these guys. They're a bit funky." And I'm in debt to them. They're a shareholder in many ways.
Right.
So yeah, we were at SEMA, yeah, and we got a Cars and Coffee in. We took a trip to Cars and Coffee in Orlando. I don't care if 20 people turn up. We got an outreach team. We've got cars to take. We've pressed cars. It's a car thing.
Yeah.
And can it be monetary? Can it be an industry? Can it be profitable? Hell yeah. But it's an industry where we're not building widgets and AC components and needles and something else. It's like, it's cool.
Right. No, this is so when we're done with this air interview, I'm just going to bring up a couple of things off air that I think are really going through my head that are almost like instantaneous wins. But this is what I'd like to do. I'd like to get you guys report your quarter in March, and maybe you have some other developments that occur, and then we have you back for a follow-up. Does that sound good?
Absolutely. Anytime. I've enjoyed it. It's a good conversation.
All right. So listen, thank you very much for coming in. This is my I think it's sitting at the wider the base, the bigger the space, is the saying, right? So it's building what I like to call a launching platform. So as I look at it, I say to myself, what's my downside risk? What's my upside potential, right? Is my risk reward here favorable. And after you listen to this story, you listen to the team, and just start doing numbers. I think this is an incredibly attractive entry point. This is going to be so much fun. I'm so glad, Matt, that you called me on this one. So, all right, guys. Thank you for tuning in to another CEO exclusive here at Alpha Wolf Trading. Today we had Scott Wallace from E.C.D. Automotive Design, ticker symbol ECDA. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? While you're at it, make sure you smash that subscribe button, because why? Those things are extremely important to us here at Alpha Wolf Trading, and we genuinely appreciate you taking the time to do it. Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.